Hello everyone, and welcome to BDO's Fringe Benefits Tax Update webinar. This webinar is designed to help you prepare for the upcoming FBT year, which is just around the corner as the FBT year ends on the 31st of March. So welcome to everyone today. My name's James Trainer, and I'm a partner in BDO's tax practice, and I specialise in all things employment tax. So FBT, very close to my heart, and we're really looking forward to the season coming ahead. Now, before I begin, I'd just like to acknowledge the traditional custodians of the country throughout Australia, wherever that might be that you're joining us today. I'm here on the land of the Gadigal people of the Eora Nation in Sydney, and I pay my respects to elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples who are joining us today. Also joining us today are some wonderful experts in their field who will be sharing their insights with us and helping us understand both the technical issues and some of the practical challenges that arise with FBT, and a little bit of an aside in Payday Super as well. So from our Melbourne office, we have Stephanie Molino, who's a People Advisory Partner. She specialises in global expatriate tax services and employment taxes, and has over 17 years of experience in all aspects of employment taxes. She's admitted as a solicitor in Victoria and is also a registered tax agent. Also joining us is Judy White, who's an Executive Director in BDO's Brisbane office in the Corporate Tax Division with over 25 years of experience. She also specialises in employment taxes and is regularly providing training, lecturing and presentations on tax topics across Australia. She's a chartered accountant, a fellow of CAANZ, and a chartered tax advisor and a member of the Tax Institute, and also a fellow of the Institute of Public Accountants and Deputy President of the Queensland IPA Council. Finally, from BDO, we have Ben Watkinson, who's a director in BDO's tax team here in Sydney. He has a background working in global accounting firms with over 19 years of experience providing specialist personal and employment tax advice to public and private companies and government organisations. He also has extensive experience assisting clients and revenue authorities with audits and other compliance activities. He's a regular presenter on various employment taxes, seminars and conferences, including CAANZ Annual FBT Essentials Workshop and state taxes conferences held by the Tax Institute. We're also delighted to be joined today by Peter Lonergan. Peter is Assistant Commissioner, Superannuation and Employer Obligations with the Australian Taxation Office. She has more than 20 years of professional tax experience and is focused on supporting and educating almost 1 million employers to help them comply with their PAYG withholding, superannuation and FBT obligations. So right on the money. So welcome everyone today. Now, without further ado, let me hand over to Judy White, who's going to run through some of the technical aspects of FBT. And after that, we'll jump back into a panel session where Ben, Steph and Peter will talk through a whole range of FBT issues. So Judy, over to you.
Great. Thank you so much, James, for that introduction. Very lovely introduction. Really appreciate that. Thank you. And welcome, everyone. Thank you, everyone, for attending this session today. So as James said, FBT, close to our hearts. We will kick off with what's hot for 2026. And you'll see there electric vehicles is certainly something that's on the agenda again. So I would just take you through a few points briefly. Firstly, there was an update to ATO guidance that had already been issued, the Practical Compliance Guideline 2024/2, and that guideline is on electric vehicle home charging rate, calculating electricity costs when a vehicle is charged at an employee's or individual's home, so they're residential. Now, so this one had been updated for plug-in vehicles. So it's relevant where the employer, so the whole, guideline and also the updates for plug-in vehicles, it's relevant for where employers are reimbursing costs to do with cars, and also for when they're using the operating cost method to value the fringe benefit. So this is because electricity does form part of fuel costs, and so therefore an operating cost for FBT purposes, and also part of car expenses. But there's a little bit of a compliance challenge here, because if that employee is charging at home, quite often there aren't a separate way to identify that compared to their residential usage of electricity. So enter in this PCG to help us with that. Now, it was updated and finalised on 20 November 2025. It now includes a methodology for calculating electricity costs for plug-in hybrid electric vehicles. So it's a detailed 7-step process. It does broadly involve calculations that allow for a comparison of what's known as your petrol kilometres and the electricity kilometres in respect of the total annual kilometres. And once all that is done, you will then add your electricity costs to the actual petrol costs and be able to arrive at the fuel expense for that hybrid vehicle. Now, just lastly on the slide, you'll see that the rate that can be used for all electric vehicles to value those electricity costs for 25-26 year is 4.2 cents per kilometre. Secondly, I just wanted to talk about the FBT exemption for plug-in hybrid vehicles, the changes there for the 25-26 year. So that exemption for those vehicles is no longer available where it's a new vehicle acquired from 1 April 25 onwards. Now, if there's an existing vehicle, an existing plug-in hybrid vehicle prior to 1 April 2025, the exemption does remain in place. However, as you all love in tax, there's often a however or a but. Can I just mention that there is a requirement to have a financially binding commitment to continue providing the use of the car for private purposes in order to be able to still use the exemption for those vehicles that were acquired before 1 April 25. So employers will need evidence of that. Peter will kindly cover FBT and electric vehicles from an ATO compliance perspective in the upcoming panel discussion. And the rest of my lovely colleagues will discuss that further. Just lastly, on electric vehicles, I did want to quickly note that there is a review being currently undertaken. This is in relation to the electric car discount, which does include the FBT exemption and the tariff exemption. So the Act that brought that into place, it does require a review for the first 3 years of that discounts, including that FBT exemption, and we are currently awaiting the findings of those. Next on board to talk to you about today is some key cases. So we have 3 particular cases I'm going to very briefly mention because, again, Peter and my lovely colleagues are going to be able to treat you all in the panel discussion with a little bit more information about these. But just to set the scene quickly, these cases will start with the Toowoomba Regional Council case, which that has to do with car parking, fringe benefits and commercial parking stations. Now, back in March 25, the Federal Court did rule that a shopping centre in Toowoomba was not a commercial parking station, which means no car parking fringe benefits arose in that case. This was appealed to the full Federal Court. It has been heard back in November 25, but the decision was reserved. So once we have more information on that, that's something to be keeping a key eye on. So that's the state of that case for now. Secondly, we have the Seppel case. So this one relates to luxury vehicles driven by directors, and also in particular what the meaning of employee is under the FBT legislation. So again, we have the federal court. They ruled back in June last year that FBT did apply to the luxury cars used by the directors of the corporate trustee of a discretionary family trust, because they did determine that in this case, these directors were considered to be employees under the FBT law. That was even though they didn't actually get any directors' fees. So that's an interesting case. It has been appealed to the taxpayers, appealed that to the full federal court, and it is scheduled to be heard on the 26th of March. It's actually only a couple of weeks away. So hopefully we'll have some more direction there in terms of those issues. And lastly, a case that fairly recently came down, also to do with luxury vehicles. It's a bit of a theme going here, this time a Ferrari, and also by a director. It also looked at the exempt vehicles provisions and the logbook records. In this case, a Ferrari was used by the sole director of a company. It was found to be subject to FBT. It was found to be available for private use. There was home garaging, etc. Interesting though, there was an argument in this case that it was an exempt vehicle. Now that usually applies to commercial vehicles. The argument was that a Ferrari is not designed principally for carrying passengers. So that was found to be incorrect, that in that case, it was determined that it was indeed designed for carrying passengers rather than racing. So sorry to everybody, that is not going to be able to qualify as an eligible vehicle for an exempt vehicle under the FBT Act. So it was subject to FBT, and also the car logbooks were considered fabricated, not relied on. I'm sure Peter will be keen to talk a little bit more about that in the discussion, panel discussion about those risks with logbooks. Now, I'm just going to quickly throw in, there's another case. So as often happens with webinars, right, really at the last minute last week, breaking news. So this one is more to do with travel expenses and record keeping and deductibility. But so just briefly, we did think as an update in terms of employment taxes to mention that the Shaw case decision in the appeal has come down. That was to do with a truck driver, whether entitled to a tax deduction for meals based on the applicable reasonable rates by the ATO. And so it was found that he actually was successful and was able to claim the deduction even though he had limited records that showed that he'd actually spent the money. So limited records around that. So just noting that that can have widespread application to any occupations there, really, in terms of relying on those reasonable rates and what record keeping is required. Now, just noting that could still be appealed. So we will wait and see if there's anything further on that case. Also, what else is hot in employment taxes? I'm going to very briefly mention Payday Super because I know that my colleagues and Peter will also talk about that in the panel discussion, but probably be remiss of me not to, since you may know of me, are quite active in this space. So briefly to set the scene for you for the later notations on this as well. We do have law, so November 25, and this is to do with employers needing to contribute super every pay cycle instead of quarterly. There will be a 7 business compliance day period after payday to ensure those contributions are compliant. The ATO has issued another practical compliance guideline here, PCG 2026/1, talks about the first year of compliance by the ATO, noting lastly, Payday Super applies to all employers, irrespective of size, industry and region, and all at the same time from 1 July 26. So it's time to get ready, and we would all love to assist you. So please don't hesitate to reach out to us for any assistance on Payday Super. And very lastly, we'll just finish off with rates. No major changes there, except the statutory benchmark interest rate and car parking threshold have changed, as you can see there, to 8.62 and $11.03. And my final slide, reminder of the due dates. So this year, Thursday, 25 June 2026, is the due date for lodgement and payment of the FBT return when you do use the tax agent. Otherwise, 21 May, if the employer is lodging themselves. So thank you very much for listening to my presentation. I'll now hand back over to James and my colleagues to kick off the panel discussions. Thank you.
Thanks, Judy, for that insightful update into the key changes for 2026. As James mentioned earlier, we're very fortunate to have Peter Lonergan from the ATO join us this morning for today's webinar, and we thought it would be useful to workshop and discuss a couple of issues in a panel format. So I'll let Peter kick off.
Thanks, Ben. And look, thank you. I'm really happy to be here today to share some insights around FBT and some of the things that attract our attention in the ATO.
Thank you, Peter, for joining us. It's great to have you here today at our 2026 FBT webinar. To be perfectly honest, though, it's hard to believe it has already been a year since our last webinar with you, when we were preparing for the 2025 FBT compliance period. How has the FBT landscape evolved from the ATO's perspective over the last 12 months, Peter?
Thanks, Steph. So as everyone knows, FBT is one of those obligations that generally sit quietly in the background, but lately we have actually seen a lot more attention, which I think is great from my point of view. And that's not just with employers, but we're also hearing lots of conversations with tax advisors as well. About 90% of all FBT returns are lodged by tax agents, and that really highlights the scale of involvement and impacts agents can have on the overall compliance. So what we did last year is we actually launched a small-scale tax agent engagement program. So our focus there was on agents who had a high proportion of employer clients, but there was no FBT activity, but there were signs that they had provided benefits. So what we found there was that when FBT was considered and discussed early on, client positions were generally much clearer and the right evidence was being kept supporting those positions. On the other hand, when FBT wasn't discussed or only discussed later on in the process, we saw a lot more gaps and potential compliance issues. These were sometimes quite basic. There was things like, did we even provide a fringe benefit? Or valuation choices that weren't properly supported because the client didn't realise what records they needed to keep. Now, one of the more surprising and concerning things we heard was that some advisors weren't discussing FBT at all with their clients. Now, the program also highlighted that some advisors had an insufficient understanding of the FBT law. Maintaining a current and accurate understanding of FBT obligations is an important part of an advisor's role. Where this knowledge is lacking, they are exposing their clients to avoidable compliance risk. So my call out is a simple one for you. Have conversations early and take time to get FBT right the first time. And doing so should save you any unexpected liabilities down the track.
Thanks, Peter. I think that's really useful information to pass on to everyone. Judy provided an update on some of the key FBT changes for 2026 at the beginning of the webinar, but is there any additional comments that you'd like to make in that space?
Thanks, Ben. Yeah, Judy was pretty comprehensive with what she covered, so apologies if I do recover it. But as she said, we did release that, include some more information in our PCG from 2024/2 to provide that optional method to calculate electricity costs when employees charge a plug-in hybrid at home. So that rate is 4.2 cents per kilometre, but it is very important to note that there are specific eligibility and record keeping requirements to be aware of when using that method. Now, you still have the option for employers to use actual costs, so you can decide on the best approach that fits the records and governance arrangements that you have in place. If you do provide plug-in hybrid electric vehicles for private use, it's a good idea to decide early which method will be used so that you understand what records need to be kept. The second change that, that Judy did talk about was back in 31st of March 2025, and that's when the plug-in hybrid electric vehicle exemption ended. It is still relevant for this tax time though, as Judy mentioned, because there are limited grandfathering arrangements where an exemption can continue. And for example, that's where there's a financially binding commitment in place to continue making the vehicle available for private use after the 1st of April 2025. However, it's important to note that any changes to those arrangements may have an impact on the exemption. The key step here is to identify whether there are any pre-existing arrangements and verify through records whether the commitment is binding in nature. Now, that might include looking at lease or finance agreements, emails or correspondence with financial service. And it's really important to be alert to any changes like optional lease extensions, as these can affect the position. Now, we have updated our website, ato.gov.au FBT PHEV, to include practical scenarios to help employers, and we recommend seeking professional advice if needed.
Thank you, Peter. It was great to see PCG 2024-2 updated to provide guidance on claiming for electricity costs that are incurred by an employee when charging their plug-in hybrid EV at home. Given these vehicles are powered by both fuel and electricity, this isn't as straightforward as the flat 4.2 cents per kilometre that's applicable for full EVs. For those organisations who have employees salary packaging a plug-in hybrid EV and incurring home electricity costs, or even employees who are using their own private plug-in hybrid EV for work purposes and subsequently claiming for those costs incurred, I recommend having a look at the PCG. The methodology is set out in paragraphs 18 to 27 of the guideline and contains 7 steps, which Judy talked through earlier. For any organisations where this is relevant, my advice is to specify upfront the information that employees should be collecting. If you have a salary packaging provider managing this process for you, it's also worth liaising with the provider to confirm what information they're collecting from these employees. As is always the case with FBT, the better the information that is available, the more accurate the FBT calculation will be. If I move on, Peter, there has been some litigation in the FBT space over the last 12 months, particularly in relation to car parking, which Judy touched on earlier. The ATO has issued an interim decision impact statement, but are you able to provide an update on the status?
Yeah, thanks, Steph. So this is the Toowoomba Regional Council case that Judy mentioned earlier in her update. So the federal court found it was not a commercial parking station. Now that's a decision that challenges aspects of the ATO's view in taxation ruling 2021/2, which was based on prior court cases. So the ATO has appealed that decision and the full federal court heard the matter in November 2025. So the decision has been reserved and we're still waiting on that. As you mentioned, we did issue an interim decision impact statement pending the outcome of that appeal. Now, because we are getting close to the FBT year, if we don't hear anything before the FBT returns are due, our current view is that taxation ruling 2021/2 remains unchanged as outlined in our decision impact statement. So in short, preparing your returns this year, unless we hear something before you need to lodge a return, follow the existing ATO guidance and then just stay tuned for the outcome of the appeal.
Yeah, thanks, Peter. From an advisor's perspective, I would sort of echo those comments as well. As we're aware, the initial decision came down just before last year's FBT returns were due in sort of February 2025. And I think initially, a number of taxpayers and organisations, may have had some initial excitement in the fact that, not only would there not be an FBT in 2025, but there may have been, an opportunity to go back and, amend prior year returns and potentially, even get a refund of FBT that may have been paid since tax ruling 2021-2 was implemented following the Qantas case. But as Peter's touched on, the ATO, I think in the interim decision statement very clearly indicated that, in their opinion, taxation ruling 2021-2 still represents, their view of the law and where we're at. So, I think organisations, it is very much a watch your space approach, and, organisations should, continue to apply tax ruling 2021-2 unless we, hear anything different. Of course, if the decision is ultimately found in favour of the taxpayer, there is the opportunity for organisations to, go back and amend prior year returns and claim the refund of any tax overpaid. Peter, moving to another case that Judy touched on, the Seppel case, are you able to have any comments in that and, what organisations should be considering in that regard?
Sure, Ben. So this case was really interesting, as Judy said, because it dealt with whether directors who are beneficiaries of the discretionary family trust are employees for FBT purposes, and whether the fringe benefits provided for the private use of luxury cars, and there were a lot of luxury cars they had access to for their private use, were in respect of their employment. Now, the federal court overturned the AAT decision and found that the definition of employee is broad and includes directors, and the exclusive use of the luxury vehicles by the directors was in respect of their employment, as the benefits arose by virtue of their roles as directors. So that was held that the FBT assessments were valid and the non-cash benefits were subject to FBT. Now, the taxpayer appealed that, and a hearing is currently scheduled to be heard in the full federal court on the 20th of March 2026. Now, this case really matters because it may influence how benefits provided to directors are treated, the application of FBT to family business structures, and how the in respect of employment test is interpreted going forward. Again, this is another one to watch. Now, before we do move on, I did want to briefly mention the recent decision in the MXSN and Commissioner of Taxation case. And that one was found to be favourable to the Commissioner. It's important to note, though, that we're still within the appeal period for that one, so there might be a change in the final outcome. In this case, we'd issued default assessments for FBT to the taxpayer, and they are a tax agent with over 38 years experience, and the assessment was in relation to car benefits. The focus of the appeal was whether the car benefit was an exempt benefit on the grounds that the Ferrari was a racing car and not a vehicle designed for the principal purpose of carrying passengers, and there was no private use, and whether the applicant held the vehicle on trust for its sole director from October 2018, when the final balloon payment on the hire purchase of the vehicle was made. Now, the applicant was unsuccessful on both grounds, but I want to highlight that the judge also found that the logbooks could not be relied on and deemed them fictitious. So it appeared that they'd been created after the compliance action commenced. So I do encourage advisors to not just accept what your client tells you at face value, but verify that there are accurate records to support their calculations.
Thanks, Peter. I think, again, a really interesting case, and I think highlighting, the importance of, appropriate record keeping. One of the questions, Peter, that I probably get asked most as a tax advisor is, well, what is the ATO focusing on? What's their compliance program? What should I be thinking about? Are you able to maybe give a bit of an update on the ATO's thinking and the current ATO compliance program in respect of FBT?
Thanks, Ben. Hopefully everyone's aware that FBT turned 40 this year, so a very big milestone. However, it still remains an area where assumptions, myths and poor record keeping often lead to non-compliance. Now, the ATO are concerned where our information suggests an employer has FBT obligations, but they don't lodge an FBT return at all, or they lodge a nil return. Now, a simple but critical question to ask yourself or your clients is, was something other than salary and wages provided? Once you understand what benefits were provided, it becomes much easier to understand where FBT applies, the current valuation method, and what records need to be kept. Now, the ATO also focuses on those who attempt to eliminate the FBT liability by applying employee contributions after the fact. So that means going back and attempting to amend prior year income tax returns. It's important to note that once the financial statements for the income year are finalised, a past year FBT obligation is unable to be discharged through journal entries. Employee contributions must reflect real arrangements, not retrofitted solutions. And we often find that when we commence an audit, someone will go back and try and amend the income tax returns. As you won't be surprised when I tell you our compliance program continues to focus on the private use of motor vehicles, especially commercial vehicles like dual cab utes. We still see employers making mistakes like claiming motor vehicles are 100% business use without having sufficient records to substantiate the claim, having invalid or missing logbooks, particularly when they use the operating cost valuation method, where it's mandatory to have a valid logbook, and of course, assuming that dual cab utes are automatically exempt without considering whether the private use meets the definition of limited. I'll give you an example of a recent case that we came across. So we audited a trendy bar restaurant. The employer had claimed that they'd used their 2 Porsches and the Mercedes to collect food, drink, and other supplies for the restaurant. They claimed it was all business use, there was no personal use at all, so they didn't lodge or pay FBT. So on investigation, we found the logbooks they had kept didn't support this and were deemed invalid. As a result, we used the default statutory method and went back 4 years. The employer ended up with a tax bill of $940,000. That included a 75% penalty of $345,000 and interest of $135,000. You can see it can be quite costly with penalties and interest on top if you don't get it right from the beginning. Now, we continue to see employers who report employee contributions at the wrong label on the tax returns. Now, this creates a mismatch in our data and can result in us contacting the employer unnecessarily for a review or audit. And finally, obviously, as I think we always say this, employers not keeping the right records to support FBT calculations, exemptions, or concessions.
Thank you, Peter. These are such interesting insights. And happy 40th birthday to the FBT regime, certainly a big milestone. From an advisor's perspective, we have certainly seen increased targeted compliance activities by the ATO, with increased data matching, both within the ATO and also with other regulators. By way of example, and this comes back to your point, Peter, about the focus on cars, we've seen data matching with state and territory government transport authorities, such as VicRoads in Victoria, which may detect registered vehicles that are not making their way into an organisation's FBT return. So I do just want to reiterate the point that record keeping is key. If an organisation is claiming that vehicles are being used exclusively for business purposes, this should be substantiated, whether by way of enforced policies or vehicle logbooks. And in this regard, I'm a strong advocate for electronic logbooks. They encourage more timely completion and are typically more accurate than paper logbooks. The FBT regime is broad and regulators have become very sophisticated in the data that can be accessed. If you're unsure of any potential FBT obligations that may exist, speak to an advisor, as benefits being detected by the ATO will often be far more costly than getting advice and making a voluntary disclosure if you do have a liability. You don't want to end up with a tax bill of almost $1 million, like the bar restaurant example that Peter shared. If we pivot away from FBT for a moment, With the upcoming introduction of Payday Super, do you have any updates to share, Peter?
Steph, that's it's great to put Payday Super on the radar because it is just around the corner. And there are two really important changes that I'd really like employers to be thinking about. So the first one is that the small business superannuation clearinghouse will close permanently from 11:59 p.m. Eastern Standard Time on the 30th of June 2026. And also Payday Super starts on the 1st of July. So closure of the small business superannuation clearinghouse means employers will be unable to access the clearinghouse from that closure time. We are encouraging employers to make the move soon, as the clearinghouse won't accept payments and you won't be able to access your super records from that time. Payday Super commences in less than 4 months. So employers need to be thinking about how they prepare to be able to report their qualifying earnings in single touch payroll and making sure that payments arrive at the super fund within 7 business days of the employee being paid, say, salary and wages. I encourage you to understand what these changes mean. It is not just as simple as paying more frequently. You can find out everything you need to know, including fact sheets, checklists and videos by visiting ato.gov.au/Payday Super.
Thanks, Peter. And I think some of the resources that the ATO have put out are very useful and timely for employers as we approach 1 July. But yeah, I echo those comments. I think that, Payday Super effectively, represents a substantial change and probably the biggest superannuation development since Super was, first introduced back in 1992. So as Peter mentioned, we're a little bit under 4 months away. So it's really now that employers need to be, putting their skates on to ensure they're taking appropriate steps and being appropriately resourced to hit the ground running come 1 July. So I guess in summary, the key sort of action that we recommend employers to be taking now is to review their employee onboarding process to ensure that appropriate information, including employee superannuation fund details, are appropriately captured at that point in time. A sleeper that is, other people are struggling with is in respect of contractors. And so we're really encouraging employers that have significant contractor populations that they pay super for to, review those processes because, contractors are, quite often paid outside of payroll, but the Payday Super regime will also apply to contractors. So if you have contractors or sole trader contractors that are engaged primarily for labour, you need to be getting your skates on and having a think about, well, what do I need to do to be able to comply from 1 July in respect of making super payments for contractors. We're also encouraging employers to review their configuration of payroll systems with respect to the maximum contributions base. So currently the maximum contributions base is obviously a quarterly cap where employers for high income earners can cap their employees at once they've reached that cap on a quarterly basis and apply that. Moving forward, the maximum contributions base will actually become an annual cap. So these high-level employees will need to continue to receive super on an annual basis until they actually reach the cap. So there's a couple of things here. You need to make sure that your payroll system is appropriately configured and talking with your payroll system providers to make sure that those updates have been made to apply the cap on an annual basis. But there's also an employee communication piece that may need to be implemented, especially for employers that pay on total remuneration basis or super inclusive, in that now these particular high incomes earners' wages may actually vary from pay to pay as a result of the cap being applied on an annual basis. So there's a HR employee communication piece to take advantage of there. Payday Super, I guess, also, from a governance perspective, represents a chance for organisations to get their house in order. And we're encouraging, employers to do that in by way of, maybe a health check, reviewing payroll code configuration, ensuring that it's appropriately configured from a super perspective, and there's no changes to the updates or configurations of any codes. Finally, I think as Peter touched on, obviously with the small business superannuation clearinghouse closing, we're encouraging organisations to review agreements and current processes with your clearinghouse and consider the current remittance frameworks that you have in place to ensure that from 1 July you're able to and your clearinghouses are able to remit super within the 7-day requirement. Again, as Judy mentioned earlier, if you require any assistance with any of these items, please don't hesitate to reach out. Before closing, I'd just like to obviously thank Peter for her time, but and throw it over to Peter if she had any sort of final closing comments.
Thanks, Ben. I just did want to cover a few things. So thinking about FBT, and if you're an advisor, it's really important that you maintain your FBT knowledge. Stay tuned for the outcomes of those litigation cases I mentioned. Review practices and have early, regular conversations with your employer clients about FBT, or if you're an employer, make sure you're having conversations with your agent, and carefully verify the information that you have. So if someone's saying they've got logbooks, have a look at those logbooks. Taking these steps may protect your clients from unexpected liabilities and penalties and safeguard your reputation. And more generally, be proactive with the plug-in hybrid arrangement. Exemptions are strict and documentation matters. Adhere to the eligibility and record keeping requirements when using the new home charging method to value fuel for plug-in hybrids, and focus on getting the basics right. Identify benefits, think about how you value them correctly, keep the right records, and lodge and pay on time. Now, we do have a lot of information on our website, the FBT website, to help employers understand and meet their obligations. And we have a detailed FBT guide for employers. There's also some free FBT modules on our learning platform called Essentials to Strengthen Your Small Business. And that doesn't just cover FBT, it's got lots of different topics in there. And if you're not already, you can stay up to date on not just FBT, but also Super Guarantee, Payday Super, Single Touch Payroll, and Pay-As-You-Go Withholding, which is all the areas I focus on, by subscribing to our newsletters, or you can follow me on LinkedIn, where I share the latest employer obligation news and updates.
Thanks, Peter. Really appreciate those insights, and we'll hand back to James to close the session.
Thanks very much, Ben. And thanks everyone for your attendance today. We had a few questions that came through as part of the registration, and it looks like we've covered pretty much all of those questions through there. There was lots of questions about EVs and plug-in hybrids, which continue to be not only a wonderful exemption, but an area that I think everyone's touched on today that has some nuances with it. So you just need to make sure that you are following the rules. And of course, that's even separate to the reviews that are going on and potentially some of the media inquiry or some of the media information that's out there, that those concessions, are under the microscope. They certainly are costing the federal government a little bit more than what they thought, perhaps a little bit more, perhaps a lot more than what they thought initially. But those exemptions are available there at the moment. So to the extent that you satisfy those conditions, make sure you do and apply them appropriately. I guess another comment just to make around the impact, I think Peter touched on this around getting your FBT right. It's also really important because it's not just an employer obligation, it does impact your employees. So if they're being provided with reportable fringe benefits and the company is not reporting them correctly, then it can have an impact on the employee who might have to amend a return later on if they get a reportable fringe benefit that hadn't been reported properly by their employer. And also FBT can have implications both for income tax and for GST. So there is a little bit of a network of taxes that you need to think about. So getting your FBT correct is really important because it does have these flow-on implications. So take advantage of the information that's available on the ATO's website. There's some wonderful guidance there. Speak to your advisors if you have any questions, because to the extent that you get these things right at the start, you're in a much better position not to have to mend things later on, not to have to try and chase information after the fact. The contemporaneous records, logbooks, and all those sorts of things, they're a really important piece of not just FBT, but all taxes more generally. So getting that stuff right is really important. So I'd like to thank Judy, Ben, and Steph from BDO for the time that you've taken to pull the session together, to sharing your insights. And of course, extend another thank you to Peter. We really appreciate your insights. It really helps us inform our clients and get the right answers and get this, this compliance program, which only pops up once a year for most employers, done right and efficiently and with as little pain as possible. So thanks once again for everyone for attending today, and good luck with the FBT season ahead. Thanks very much.